Hi, I'm Ishan.
I'm Ed.
And this is the Underqualified podcast where we talk about business casually.
Today we talked about Guzman and Gomez, a popular Mexican food brand that just did an IPO.
Yep.
Talked about OpenAI and potential risks and a bit of drama that's gone on this week. And then we covered a great investment.
Yes, one of the best investments, $2.5 million into $200 million.
Yeah.
Stay tuned.
Stay tuned.
So there's a few things I want to talk about today. A taco company went public. GYG, Guzman y Gomez, went public this week in Australia. Going public means you start a company, there's only a few shareholders. Let's say Ed and I start a company and
we get one investor.
We get an investor. We're still a private company. It's not outside random people buying shares.
We don't have to tell anyone how much we're making. We don't have
no disclosures.
No disclosures, no share price, nothing like that. And there's technically a share price, but.
And then we grow. And at some point, we grow to the point where we want liquidity in our company. There's people in our company. Let's say we have 50 employees now. They have shares in the company, and we don't have like a place where you can publicly trade those shares. So your employees and your early investors and ourselves, we want to start selling these shares to other people. And the easiest way to do that is to take your company public on a stock exchange. GYG, this is a pretty big deal in Australia. So I'll give a quick recap of the trading, and then maybe you might know a bit more about the numbers because I haven't looked at it too much.
I know a little bit about the story as well.
And the story, yeah. But just why people should be interested. GYG is a Mexican fast food franchisee chain, and they have, I'm guessing, a couple hundred stores, maybe 100 stores, maybe 200 stores.
I think they have 100.
They have 100 stores, and they do about a couple $100 million a year in revenue. In profit, it's a completely different story. I believe
last year was $320 million in revenue.
So GYG, it doesn't make a lot of profit. It does a lot of revenue, and it's like a good brand. And it's like Australia's Chipotle that has branched outside of Australia. I was in Tokyo and I saw GYG there, and yeah, they've got GYG there. And so they are kind of expanding a bit. And it is a good story. I'm not too sure of like the unit economics of each franchisee and how that works. But the public loves it, obviously, because of this week. They went public on the Australian Stock Exchange, I believe at $22 a share. And on day one, there was an IPO pop where it closed trading at $30 a share, which values GYG at 3 billion Australian dollars, which is like pretty insane for a company that is profitable, but mildly profitable, makes $3 million only a year. And it's a QSR, a quick service restaurant business. Like it's not like a very lucrative, high margin tech business.
Very competitive too.
Very competitive, a lot of costs, a lot of maintenance. It's not very, very high growth. So the fact that it's being valued kind of like a technology company is crazy. One last thing before I'll let you explain their story and some of their numbers. I see a lot of retail on Twitter, and this might be just like a joke or a meme that I don't know it's a meme, but people are like, the only due diligence and analysis I need to do on GYG is Chipotle is worth $94 billion and GYG is worth $1.5 billion. It's like, that's the upside. And that's why people think it's cheap and blah, blah, blah. Which is like a bit worrying to see that people are using that napkin math. But I think it might be a meme. But yeah,
it's like you can.
Over to you.
I guess, yeah. So the backstory, I think, of GYG is there was a guy working as a doctor in Canberra, which is like a small state, like very like university and politics focused for those US listeners.
Shout out Canberra, Lincoln.
Shout out Canberra. He was working there as a doctor, and I think classic kind of stuff of just like, not enough healthy options. He wanted some Mexican food. It wasn't a great Mexican. He's like, I'm going to open and he opened the first franchise.
Yeah.
And then super smart guy. So he was able to do that profitably and open more and more and more. And then he, just kept growing. And then now they've got like 100 and a couple of hundred stores.
Wait a second. Wait. Did you say doctor?
Yeah.
I think you're talking about someone completely.
No way. It's a fucking doctor. Who was it?
Ed, you're talking about the Sombrero guy.
Oh, no shit.
Ed.
Yeah, it's the same shit.
Yes.
Same shit.
GYG.
We'll cut that.
I thought GYG is
Sam Evans or something?
No, Sam Prince is a Sombrero guy.
Oh, okay. Yeah, we'll cut that. I know nothing about GYG.
Go back a few minutes ago. You were like, I know.
Because does Sombrero have more than GYG then?
No. Okay, yes, you were talking about.
Yeah,
so
that
GYG is
fucker.
started by like a New York banker.
Oh, okay. I have no idea.
Okay.
You tell
So,
us.
well, I mean, he looks like a nice guy.
It's like a fucking weirdo, yeah.
Yeah. So sorry, Sombrero is like a competitor to GYG, and that's what Ed got mixed up there. However, he's from Melbourne. That's
yeah,
probably
he's cool.
why
He
you
does
know
lots
the
of
story.
he does lots of like interesting entrepreneurial stuff.
Interesting, Sam Prince. If you want to come on the podcast,
Yeah, I'd invest in Sombrero if it wasn't $3 billion valuation, but
wait, you would?
yeah.
If
they went public,
okay,
it'd be
like I
crazy.
just asked him to come on, but I never see anyone inside of Sombrero.
I haven't seen his Sombreros.
They were amazing until they got the measuring cups out, and then they went downhill. They used to load those things up.
I also think like the food tastes better and is high quality at GYG,
Interesting.
but maybe I'm just a hater.
They're pretty different. to be
They've
fair.
got like nice brownies and stuff. Do you know the blondie stuff? Okay, anyway. So honestly, I'm not that prepared, but I'm pretty sure it was a New York banker. So, and I don't think he's Mexican as well. So the guy who started GYG,
It's not good
and he's
Mexican food.
He's not
like,
Australian as well, I think. And producer Lincoln will search him up. Stephen Marks is his name. But yeah, so I think I'm gonna guess right now he saw Chipotle going crazy in the States, and there's no name for it, but there's this business concept of if something is working very well in one country, if you just go to another country that has like an adjacent culture, so you can't like, honestly, like I don't know why they're in Japan, because maybe I don't know if it's doing well there, but like Japan's a completely different culture to Australia. So if it's working well in Australia, why would it work in Japan? But anyway, he saw Chipotle working well in America, and America and Australia are kind of similar in terms of culture. And so, yeah, I'm speaking on behalf of him. I didn't hear this from him at all, but I'm assuming he saw that and was like, let me bring Chipotle to Australia and let me just start my own Chipotle. Let me not like, Australians, they're a bit healthier than Americans. And like, he probably had some like twists and turns to Chipotle's like business model and branding that he was like, all right, I could probably pull this off and do it better. Yeah, I know nothing else besides that.
I think it's I know more about the financials and why they're making no sense as an investor.
Do you want to go into that?
But it's so like pretty much you look at GYG and the fundamental, like, you're talking like Warren Buffett, reason why you would invest in a stock is so that it pays you a dividend. And over a whatever you want it to be, 5, 10, 15 year period, those dividends pay back your initial investment and then they start earning you an income. That's the idea of a stock.
Yes.
What's happened since the dot-com boom is people started buying stocks hoping to sell them for more later on, which leads to this kind of phenomenon which has been huge in crypto where it's just like a hot potato and someone gets fucked at the end of the line. You know what I mean?
Yeah.
And I think that's happened more and more with stocks recently. And there are some incredibly valuable stocks, like your Apples, your Googles and stuff, which I'd argue they're actually quite overvalued at the moment. But with GYG, from a dividend perspective, if you're buying at a $3 billion valuation and they're making $3 million profit, you're going to be getting a tiny, tiny dividend compared to your initial investment.
If they paid out a dividend,
if they
as
ever
well.
paid one out, which
they don't have an obligation to.
no, and they're going to put out all the money raised from this IPO will go into growth, and they'll probably lose money next year
I think
because
it was about 200 million they raised.
I think they're trying to get into 1,000 stores internationally over the next 7 years, 8 years, which I think is going to be quite hard. But even if they do that, you as an investor, the stock price might go up, but I just don't think it's great value. I think there's better value investments out there.
So
Why don't I give the background since Ed fucked that up?
Thank you,
all right,
Lincoln.
yeah, give us the background.
So
please, Lincoln.
established by Stephen Marks, who is a New Yorker. He previously worked as a hedge fund manager. He relocated to Australia, found the quality of Mexican food to be poor, and decided to start a restaurant. He has stated that real Mexican is really urban, street, and hot.
It's also GYG, I'd argue, after going to Mexico, is not very good Mexican food. It's good fast food though.
Right. Yeah.
Interestingly, they are international already. So they've got one store opened in Singapore in 2013, Tokyo in 2015, and January 2020 they opened in Chicago.
Chi-town.
They raised $242 million in this IPO so that they can use those proceeds to then grow the business. What Ed talked about before was like one style of investing where, and it is like the core principle of investing where a stock is just like the future cash flows of what you will get back. And people do invest using that principle, but like you said, there's new ways of investing and valuing companies. These days, the craze is all about how fast can a company grow, and a lot of investors put the dividends, that whole entire cash generating play, in the back seat if the company can grow really fast. Because generally, like a company that is making money and mature and throws off dividends, they're probably growing like 5-10% a year.
Yeah.
And they might not even grow.
Yeah.
And there's a reason.
Because they're not investing in
Yeah,
growth.
they're not investing in growth. All that money that they could be reinvesting in growing the business, they're just giving back to shareholders.
Yeah.
And so when you look at a GYG, you wouldn't look at it as, you wouldn't value it based on their financials today, because they're still in growth mode. They're still like a relatively young company. It's not fully matured yet. They have all these expansion plans. It's very similar to actually your business, Grog.
Yeah.
Right? Like you're going to expand into the
More
US.
stores, more countries.
Yeah, like you want to see how big you can get this. And so GYG is honestly more valued based on what they call comps. And what I spoke about before with Chipotle and GYG, and Chipotle is worth $94 billion. That's a comp, but that's probably not the accurate comp.
Yeah.
The accurate comp would be other QSR franchise, like quick service restaurant franchises that do similar revenue, similar margins, and how much are they valued compared to what GYG is valued. So GYG, I'm pretty sure trades at like, again, I haven't checked, but it's going to be like 40, 50 times revenue maybe, and EBITDA, and
I think it's 1,000 times EBITDA currently.
yeah. So that's what a technology business that's growing. I mean,
Crazily.
1,000 times EBITDA is not even like a thing, but like generally technology companies will trade at insane multiples of how much they're actually generating
10,
revenue
20,
or
30
EBITDA wise.
times revenue.
Yeah, they'll do something crazy, but it's because they're either growing 100% year on year or 50% quarter on quarter. A real life business like GYG that have real life leases and real life workers, and I say real life a lot, but it is like a very traditional. There's nothing technological about the business. You cannot say that just because they have an app where you can order a burrito makes it a technology business. I think they might try and do that sort of argument here and there.
It's not scalable.
It's not. Yeah, their business is just not easily scalable.
Yeah.
There's a lot of processes that have to be built in order to get to 1,000 stores in America competing, and also America's like the most competitive market, where maybe like right now we pay, how much is a burrito at GYG? It's like $12
$12 or something.
$12. So let's say like $8 US. How much is a burrito at Chipotle in America? $8 US seems pretty expensive for a burrito.
I don't know how much.
But
Probably
I
8
don't
to
know.
10. But I think
It is
I
similar?
guess what they're investing, what you would, if you were on the positive side of GYG, is you would be saying that, yes, this dude, Sam's model for opening a new store.
Wait. That's Sam, still the sombrero guy.
Hey, what's his name? I think it's another Sam. Is it another Sam?
No, his name's Steven.
Steven.
Yeah.
So this Steven dude, you'd be saying, okay, the way he opens a restaurant, the way he signs the lease, the way he orders beans and wraps and staff and how much he pays them, all of that is a good model.
Yeah.
And it makes money and it's easy to just replicate in a new suburb, a new country, new state, wherever, right?
Yeah.
And then you'd also be arguing that if he wanted to open this in America, which is the largest probably food market in the world, or if you wanted to open in Thailand, if you wanted to open in New Zealand, if you wanted to open in China, that Guzman and Gomez product offering is good enough internationally to just open stores and be successful everywhere, which I'm not sure about. We'll see. They've got the money to do it. They're going to try. But I think you're competing with Taco Bell, Sweet Green, Chipotle, all the Chipotle ripoffs, all those kind of healthy fast food options in America. And then you're also competing with all the new ingredient costs, all the new supply chains, all of that stuff in a completely new market. So I'm interested to see how they go in the US. They might need more than 240 million, which might mean a discount in the share price, all that kind of stuff, a new raise. So I'm very bearish on GYG.
Ooh,
and
I would not
put my money. I would
at
not buy
$30.
I would not buy at $30.
I would say, Producer Lincoln's got some stats on the screen. So GYG has 185 restaurants as of May 2024. Chipotle has 271 restaurants.
No. That's how
No?
many they opened in 2023.
Oh,
Beasts.
And
okay.
they
So,
plan to open between 285 and 315 new stores in 2023.
So
So
basically-
they've got a fucking model that works.
They've got about 3,500 stores.
yeah, so Chipotle knows how to scale, and they've got
They're expanding by the number, more than the number of GYG stores per year. And that's why they have such a high valuation, right?
But that's what's crazy because you're valuing Guzman and Gomez right now at pretty much a roughly per restaurant basis as Chipotle. If Guzman can get to that 3,500 store mark, they'll have 30 times more stores, which would get them to that 100 billion mark, which is around where Chipotle is. But can they do that is the risk. And currently they're being
There's
valued.
execution
They're
risk,
being
yeah.
valued as if they can.
They can do that. Yeah. Sometimes things in the market are like priced to perfection. In my opinion, which is not informed, because I know nothing
Clearly.
about GYG's business. At a glance, GYG currently valued at 3 billion Australian dollars, which is like, let's say, almost $2 billion. I think over 10 years, on a 10-year time frame, I think that's probably cheap. Just because I do like GYG. I think they've done incredibly well scaling in Australia. They clearly have something special there with the branding and people loving the brand. And there's something there that is intangible that I'm aware of. And I think they can replicate that in other Western regions. I don't know how they're going in the East, but in Western regions, I think that they can replicate some of that source. I'm not familiar with the unit economics of their franchisees and how much they're making and why they're only making $3 million. I'm assuming the reason why they've only made $3 million last year or this financial year is because of all the reinvesting into growth and stuff like that.
They spent 13 on marketing just last year alone.
Yeah. So I think that I'm actually not too worried about the execution risk. I think that they have shown that they can do this. I'm unsure about if they can do it at scale profitably, but look, if they can't do it, there will be people hired and people that will come in. There'll be that will do it for them. So they might poach some people from Chipotle or whatever to figure out how to replicate that model, because they do have, like, Chipotle has been around for fucking 100 years. Not really 100, but you know what I mean.
Yeah.
Like, the model, the blueprint's there. Like, it shouldn't be a secret of how Chipotle has been able to do it. And so over a 10-year horizon, if you put a gun to my head and you're like, buy or sell Chipotle right now, GYG right now at $30 a share, $3 billion Australian valuation, I would buy it. On a 5-year basis, I would probably buy it. On a 1-year basis, I don't know, probably not. Like, maybe $3 billion is a hefty price for them right now. And then if I was just trading it, honestly, I might buy it if I was trading it, just because if I can see GYG being a meme stock.
Yeah.
It has that kind of. I've already been seeing all the tweets about it and stuff like that, and people thinking, this could be like Chipotle, and even if it's just 10% of Chipotle, that's $10 billion, and then people buy it up to 10 billion, blah blah blah. So honestly, as a trade, it could be. I think maybe if people catch on that it's a lot harder to be Chipotle than it is later on. Might be good to trade it, but in terms of within the next year, for them to grow into something substantially more than 3 billion based off the fundamentals, it's going to take time. You need to build out all these fucking stores, but building each store, I'm assuming takes a couple of months.
Yeah.
And
people. That's the kind of
people.
That's what I would be on. I'm on the sell side is because of that execution risk and also you like look at the initial logic of launching, and it's like, all right, there's these great Mexican food offerings. And even just small like local stores in the US. It's tons of it just because there's more Mexican population. We've got very small Mexican population here. And I think that his idea of bringing it here was smart. But then what's the logic? He brought it here to grow here. And then now it's kind of, he's going to grow here more, but it's going to max out at a certain point and you need to go to the US.
Yeah, I wonder if he's like hit saturation here. I'm not too sure.
And then what's the point in, he only made the offering here because it was needed. In the US, it wasn't. And so that's going to be interesting. And how will that kind of competition affect margins in the long term, all that kind of stuff. I'm definitely on the sell side, but I think a lot of IPOs come with a lot of hype, and if they can't keep up that kind of good corporate communication with investors of good news every couple of months and all that kind of stuff to keep the price up, it'll slip, and then you might be able to get it for I think maybe $1 billion is good value, but that's obviously a very heavy discount to IPO price.
Yeah.
I have a question.
Yeah. Go ahead.
If they expand to the US, but they're listed on the ASX, like, would they potentially set up a second entity that's
a secondary listing, a dual listing?
Well, does the ASX see any value in them setting up an American entity?
Well, usually they like that happened with a stock called Updata. I'm not sure if they've listed on the NASDAQ yet, but they were big on ASX, and then they started moving. Their whole job is that you go to them with all your internet, water, phone, blah, 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 when you're moving house.
Yeah.
And they kind of just do it all for you. They're a tech stock. And that they were big on the IPO market in Australia probably like 5 or 6 years ago. And they were like...
Sounds like a scam tech stock. Like that doesn't even sound like a technology company.
They had a pretty good product because it just lumped it all in, and then it meant you get a discount and blah, blah, blah. And they landed a contract with the US military to like when all military personnel are moving around all the time. So they would use Updata to change all their phone, water, electricity, all that stuff.
Yeah.
Whatever. And then they delisted from the ASX because they wanted to list on the NASDAQ, because obviously there's a lot more money on the NASDAQ because it's got all of the American
pool
investors.
Of capital and
and then it's the climate's changed a little bit now. Like you've things like Stake, the US trading app for Australians means that we have more exposure to the NASDAQ. It's not as hard to invest in NASDAQ stocks.
Yeah.
But yeah, I think that would be, I guess that's the move for most Australian companies, is a delisting on the ASX and then a relist on the NASDAQ. But it means they have to go through that whole, S1 prospectus bullshit roadshow process to get someone to
they have to be
it
big enough to list on. So I think it's a pretty rare thing to happen. I'm not too sure though. Like if GYG potentially does a dual listing, I think they are an Australian company. It was born in Australia. For them to just leave ASX, probably doesn't look that great. And I think the Australian government as well would like an Australian story. Like a GYG is like a feel good story in some ways, even though it's like very manufactured. New York banker. That's not even Mexican.
No idea,
Wait, is he Mexican or not? I feel bad saying he's not Mexican if he isn't.
I'm not sure.
But it's like organic, but it's not organic. But regardless, we would both not recommend, even though we're not financial advisors and we're not giving any financial advice.
I'm not investing in it. I could invest, I'm not.
Yeah, I'm not investing in it. Although I think over a decade they could do well. We'll see.
Says he's a New Yorker, so I imagine he's American.
Yeah, I know he's definitely American, but does he have like Mexican roots? I don't know. What's his name? It's like he's got a real like white name. I think it's like I think his true first name, Steve Mark.
Stephen Marks. His
Mark.
co-founder's Robert Hazan.
Oh yeah, maybe. I'm not too sure. I don't want to give slander on his name.
But what happens to an ASX shareholder if they were to delist and go to NASDAQ?
They would get the equivalent shares on the NASDAQ if that's what's being proposed here, where we are no longer being listed on the ASX. Sometimes, a dual listing happens all the time. I know, like Square / Afterpay.
I've got Square shares now, so I have to pay.
Yeah, like that happened. There's a few case studies of that happening.
At a certain point, if they want to get that $90 billion valuation, they probably will need to get to the NASDAQ. But we'll just see how they
I don't think there's a single Australian stock that's $90 billion. There's not a single Australian technology stock that's over 10 or 20 billion. I think the biggest one is maybe 10 billion.
And then it's like Canva, it's whatever, and they're all still private markets.
Yeah. All the like anything that's 80, 90, 100 billion is probably like a bank or something in Australia.
And mining and CSL.
Some mining stuff. Yep. So producer Lincoln's got it up here. Atlassian's not listed on the ASX, so that doesn't count. Afterpay is no longer listed anyway. Realestate.com. Is our biggest technology stock realestate.com? Because that's not really technology. I wouldn't regard that as a technology company.
It was technology in like 1994.
Yeah. It's like they have a website, but I don't know. I guess it is tech. Xero is legitimately like a technology company, 20 billion. Yeah. Okay. Wise Tech Global, computer share. The fact that one of our biggest technology companies is a share registry, like Australia is really behind.
And car sales, like we had, I guess in the
we've got nothing.
Because it was early 2000s when basically some people in Australia decided that the newspaper wasn't a great place for
now they're the
ads.
biggest technology
and then
company.
You've got domain and real estate and car sales.
Yeah.
Which is really interesting. That would have been a good business to start back in the day. Yeah, 1997. That was some really popped off back then.
Yeah. And so maybe the last thing I'll touch on with GYG. So people are buying GYG because of the US growth story. Mentioning Afterpay reminded me of their whole narrative where they hit saturation in Australia. They just couldn't grow the way they were. Like before, every single quarter they would have the earnings or the investor updates, and you would see that in Australia they were growing 50% quarter on quarter, 80% quarter on quarter, 100% quarter on quarter, and then at some point that growth plateaued, and they could only grow 10%, 8%, 5% quarter on quarter. And so when that happened and the stock plateaued as well, they said, you know what? We're going to America. And America had competition, big competition. It had like Affirm, Klarna, all those sort of guys over there. But they went there, they executed, and then, Afterpay went from plateauing at 2 to 3 billion as an Australian technology company, an Australian story, to within months, their US business dwarfed the entirety of the Australian business that they spent building for 5 years.
Yeah.
Very quickly, then they got bought by an American company called Square for $30 billion. And so they were able to so that's like maybe if GYG was able to execute like that, that gives them hope.
But you never know. There's hope for like an acquisition. There's hope for like strategic partnership.
Do you think Chipotle would buy GYG? Maybe
it's interesting, or
right?
even a kind
some
of sideline competitor. Huge food distribution business.
Like the holdco that owns Pizza Hut, Domino's, blah blah blah. I don't know what the fuck.
Yeah.
One of those type of things could buy them.
And then they've got the distribution. They've got the people on the ground that they know how to do all the leasing and they know how to do all that stuff in the US. It would be probably a good decision. That I feel like that wraps up our horrific
GYG.
analysis of GYG.
Yeah, I want to quickly apologize that we both were not prepared. I knew none of the numbers, and Ed literally thought
it was
entirely other guy was the founder. He was talking about an entirely other business. So that, you know what? That's kind of funny though. that we fucked up that topic so bad.
So yeah, don't invest if you have as much knowledge as us.
Yeah. If you don't know, that was. But we'll keep that in. That's kind of funny. Did we want to talk about the second big topic of the week? That I hope we also. This might be our worst episode.
So
But that's okay.
I know nothing about this topic. if you know the law.
Yeah. So I don't know that much as well, but we'll just talk about it anyway. The OpenAI co-founder, his name's Ilya Sutskever. I don't want to butcher his last name. I believe is Russian. I don't want to, dishonor his by mispronouncing it. But one of the co-founders of OpenAI, Ilya, he left, and he's been like kind of inactive for a while. But he's one of the main guys at OpenAI who like quite literally built the architecture of ChatGPT. He was like the chief scientist and co-founder. He left and he's starting his own ChatGPT, OpenAI, LLM. I don't know if it's it's definitely not like some commercially available LLM, but he's creating his own AI company. It's called, I believe it's called Safe Super Intelligence. And I'll give you a bit of a backstory on Ilya. Do you know much about Ilya?
Zero.
So I'm pretty sure he was born in Russia. And he studied maybe at like in Tel Aviv, like in somewhere in Israel, maybe. I don't know exactly where
Tel
in Israel.
Aviv is the tech capital.
That is like the tech capital, so maybe it was there. He studied there. He moved to Toronto as well, I believe, to study a bit more. And there was some competition there where he basically, I don't remember what the technology was, but him and a few other students, they came together and built some machine learning technology that in this competition, it was just other students, the professors and everything were like stunned by what they created. Like it was light years ahead of everyone else. And I believe it was some image detection technology. I forgot what it was called, but so he was obviously like bright and gifted pretty early on. He did study under George something, maybe George Hopkins or Hawkins or something like that, who was like the godfather of AI. So it was like a classic story where very bright, intelligent, genius kid is mentored by one of the greats in like some field, and him, building technologies that starts stunning everyone. And so Google, that professor started a company, grabbed Ilya, and Google ended up buying that company. And I'm pretty sure because Ilya was a part of it. So what happens in AI a lot in these like niche fields, there's a thing called acqui-hire, where you buy a company not for the company's technology or their business, but you're buying it for its people. And I'm pretty sure that's what happened here, where they were like, the only way we can get Ilya is if we just buy out the company. And so he worked at Google for a bit as a research scientist, and he did a lot of great stuff there until I believe he left Google to start OpenAI with Sam Altman and Elon Musk and all that stuff. I think he did some stuff with Tesla before that stint. But anyway, so that's Ilya. And now fast forward maybe last year.
Is Sam Altman a technical co-founder?
He's technical, but I don't believe that he was like the one building out ChatGPT.
That feels like it
but
was
he is
Ilya?
technical. Oh yeah, it was definitely Ilya. Yeah. So Ilya, laid the groundwork for. I think what happened was that image detection technology that something to do with image processing, he wanted to apply to language and text. He speaks multiple languages, and so he wanted to apply it to text languages, which is how ChatGPT was born. And there's some emails that were leaked early on between Elon Musk and Ilya. And this is back in 2016. Ilya was talking about how, this technology needs to be safe, and that one day it can get powerful and it can go out of hand, and that they could be the ones to create this. And so he's always been sort of cognizant of building safe AI. He's always, Sam Altman is very much the co-founder that was all about, I want to create a large business and I want to commercialize this. He is true to his like stereotype as that scientist who's like, no, we should build it safely and scale it safely.
It really
and
is like some kind of sci-fi movie. Like they've got this fucking Hulk dude.
There's all these like archetypes of all these.
and it's like, no,
yeah.
you can't. It's like a nuclear reactor. Like you can't push it that far. And then
Yeah.
Sam Altman's like, yes, we can. And then it all goes to shit.
So, fast forward to last year, OpenAI had that debacle where Sam Altman got fired. And there was this whole meme about and one of the people that wanted to fire Sam was Ilya. Ilya went to the board of OpenAI
Yeah.
and there was a few people, but he was one of the main people that were like, Sam needs to be ousted from this company. And that happened, and everyone knows that story. We'll just quickly surmise it 5 seconds. Sam got fired. A few days went by. All the employees of OpenAI wanted Sam back. And then Microsoft hired Sam back. Microsoft's the lead investor and almost majority holder in OpenAI, so they have some say. So then Sam got rehired. Ilya got fired, or he left. I think he left. They didn't publicly fire him, but I think it was very much like, you came at the king.
You best not miss.
Yeah, you best not miss. So Ilya and a bunch of other people got let go / they left. And so that happened, and we didn't hear anything from Ilya for about a year, or however long it's been since that happened, maybe close to a year. And this week he announced that he's doing his own thing and he's inventing his own AI, and he wants to, he wrote out this letter where he was like, super intelligence is within reach. And people really listen to Ilya because he is
Smart
the guy.
right?
No, he is like the guy. Like he's the one he's the reason why OpenAI exists in the first place. Elon Musk tremendously respects OpenAI, and Elon Musk doesn't like Sam Altman or OpenAI, so that speaks volumes that he really listens to Ilya. And then there is this meme of when everyone wanted to find out, why did Ilya go to the board to fire Sam, and the reason never came out, by the way. And so there's this meme of what did Ilya see internally?
Yeah.
And it is kind of like sci-fi, where did Ilya see artificial general intelligence, AGI? Did he what did he see? What did he see that was so scary, that was so urgent that he had to go to the fucking board to oust, Sam? And so so him coming out to do his own thing is very interesting, and he's taking the approach of they are not going to release a commercial product. They're not going to be constrained by any large outside investor like a Microsoft to say, hey, you need to do this, this, this. They want to just focus on, we want to build one product, and that product is super intelligence, and we want to make sure that we contain it so it's safe. And anyway, him coming out to do that sparks a whole... a whole wave, and not just the AI community, but tech in general, where he's probably going to raise a lot of fucking money. Now, I don't know if that's what he wants to do, but I think they already have some committed investors, and my guess would be they are probably going to raise a couple $100 million to billions of dollars, because that's what you need, the equipment to start a company like Ilya's and like OpenAI.
Just processing, right?
You need the GPUs. You need Nvidia. So, this is really good for Jensen Huang is licking his lips seeing that,
because he's selling picks and shovels in the gold rush.
Because what Ilya is going to go to Jensen, to Nvidia, and go I just raised $1 billion. I'm going to take 900 million of that and buy your chips.
Yeah.
And so I don't know. I think that's it's good to have a bit of a insight into who Ilya is, because I don't think he's well known. I don't think regular people kind of don't already know who Sam is, but people definitely don't know who Ilya is.
Yeah.
So it's good to know about Ilya. I think people should take or pay close attention to SSI's Safe Super Intelligence, his company. He's also co-founded it with Daniel Gross. Have you heard of Daniel Gross?
No.
Also this just fucking genius, very smart, calculated young person as well, who's built companies and sold them. I would assume that he's probably worth a couple $100 million. Maybe he's a billionaire. I'm not too sure. He actually came on My First Million, the podcast I was doing before. So he co-founded this with Ilya, and I believe there's a third co-founder. Producer Lincoln, could you please look up Daniel Gross and see what companies he's been a part of / sold? and how old he is as well. That'd be good to find out. But yeah, pay attention to, if you're curious about the AI thematic and how to invest and where to invest,
Yeah,
you
it's
should
pretty
pay
good.
attention to this. Okay, so
Pretty
yeah,
good.
he's an early investor in Uber, Instacart, Figma, GitHub, Airtable, Ripple, or Rippling, Perplexity, and then
So I find it very interesting that they all came from Y Combinator as well.
yeah. Oh yeah, he's a partner at Y Combinator. Time like magazine listed him as one of the most influential people in AI.
And that was,
Um,
what, 10 years ago?
No, I'm assuming that was probably recently. He's from Israel. He was on Forbes 30 under 30 in 2011, which is interesting because now these days, if someone's in Forbes 30 under 30, they're like
They're just paid.
they're a scammer, or like, yeah, they're not actually great. So yeah, he's 32 years old, so he's very, very young. I'm pretty sure Ilya is probably like in his 30s as well. So
I find it very
yeah.
interesting how the kind of giants, Microsoft, Apple, Google, have now almost bent the knee to these AI companies that have built a technology that's just completely
It's like outpacing their progress.
outpaced them. Like and like, yeah, it's crazy that you've got Microsoft as a lead investor, and then Apple as a main client / partner
To
in the
OpenAI.
same company, which
Yeah.
is like, I feel like they're just such a bitter feud for so long, and now
Yeah,
they're,
that's
now they're both
wild.
like,
Yeah.
fuck, we can't build this shit. Like they've built something crazy.
I
and
think that's like very exciting.
they all just want a part of it. They're like, look, we're not going to be the best anymore. Like OpenAI is going to be number one.
That should that's very exciting because that should give, not hope's not the right word, but like
No,
people
I know what you're
probably
saying.
looked at all these big companies. Like if you're building a new technology, a new company, and you're like, oh, Apple's just going to do this, Microsoft
Yeah.
is just going to do this. You're right. They are bending the knee
Mm.
to to the David. Like they're the Goliath.
Mm.
And yeah, this is like a very exciting time for anyone that wants to build. And I think it shouldn't just be for like technology people. I think you should never look at like the incumbent and think
Never beat them.
you can never
Yeah.
beat them, because history repeats itself. We talked about it last episode. You can definitely
Everything shifts. Like every I guess that history will, time will tell with this AI stuff.
Yeah.
But you look at, I guess, smartphones and how they completely destroyed companies like BlackBerry.
Yeah.
And
You can knock out,
that was
yeah.
like a completely 100x better technology than that was currently existing. Like and then same with AI, we went from kind of bad chatbots on e-commerce sites to like
them
almost
replacing
general
support
intelligence.
staff of an entire company,
and them
yeah.
replacing Google search, and them it's crazy.
It's all unfolding.
And that's what they have in public and what they're building in private. It's probably their rate of deployment and ability to make a more complex product probably gets easier and easier for them
Yeah.
as their product gets better, and their own product can help them build that product to be better.
Yeah.
I find it fascinating that like we're witnessing a huge shift from like what people would have seen in the iPhone, and now OpenAI is that new thing.
Yeah.
And it's wild. And I think Microsoft and Apple are smart to have instead of trying to compete like BlackBerry did with a shitty smartphone. BlackBerry's still existing, but they're not doing as well as they were.
Probably, mate. We
they're
make more
still
money
listed,
than BlackBerry.
but yeah.
So,
But yeah, I think it's very interesting that Microsoft and Apple are both a part of it. I think Microsoft might end up beating Apple just because Microsoft has a fat chunk of OpenAI, but maybe the Katy Perry curse will prevail, and
Yes.
Sam Altman is evil, and he's going to use this artificial general intelligence to take over the world or something. We don't
Well,
know.
there's a new model that came out today. Who made Claude? Okay, producer Lincoln, could you please search up the Claude 3.5? Claude 3.5. A new model came out today that already beats by Anthropic, which is another like Perplexity, ChatGPT type competitor. This is better than ChatGPT 4.0 by all metrics. It's 1/5 the cost of their last model, and yeah, it's like 10 times faster, and it's better. Like, look at, you can see the stats on the screen right there. compared to Google's one and Facebook's and so like
What's
it's
Facebook's? Is Facebook Gemini?
Llama.
Oh,
Llama. And so yeah, this is like at some point, your model, like at some point, this chart right here, it's just going to be 99% for each, and every model is going to be 99%. So then how do you differentiate? Like why would people use your model? That's when you have to have like a certain type of moat. And I think the moat will be things like OpenAI, they have the voice interaction and it's so clean and crisp and quick to respond, and people prefer interacting with AI that way.
Everyone knows about ChatGPT now. I feel like if you asked normal person,
branding is another one.
ChatGPT is the one
like
that they'll talk
have you
about.
ever heard of Anthropic?
Yeah, I think so.
Okay, yeah, but you look at tech stuff. But like I think the normal person has no idea what Anthropic is.
No.
Like that their branding isn't like great. Also,
and all this drama with ChatGPT just makes their brand larger, and it makes it feel like it's ChatGPT or OpenAI mentioned with Apple and Microsoft, and that's kind of it.
Yeah. So like, I think like Anthropic's worth $20 billion at the moment. So all these models, they're going to be very similar in terms of performance and output, and these companies are going to need to differentiate in some form of branding, some distribution moat, some the UI, the UX, how you're going to interact with these models, what's going to be more convenient and easier, doing things like partnering up with Apple so it has access to using your phone, because that's something that OpenAI will be able to do. You won't be able to do that. It doesn't matter that Anthropic is better than ChatGPT or Perplexity is better. You can't have those models speaking and interacting with your phone.
Yeah.
And so, well, like applications on your phone. So like, yeah, Sam is, the fact that he's
in the lead.
He's in the lead by knowing that this is where things are heading and focusing on these things rather than, I guess the other ones, which, you know, they might be patting themselves on the back that our model is 1.3% better this month.
It might be an Android thing where like, there are techie people who want to do certain things with their phones that iPhones can't do, and the UI might be better. It might be, faster, all that kind of stuff. But at the end of the day, whoever builds the nicest to use product for the general population, I think will win. And Apple's been very good at that. And having an OpenAI logo on every Apple phone in some form, whether it's on the screen or whatever, as part of the partnership. And it'll also be advertised as a feature of the new iPhones is like compatible with OpenAI or ChatGPT.
Yeah.
It's going to be really, really interesting to see how this all plays out. And yeah, I wonder what I would be investing in if I could.
Yeah, I think at this point, if you think OpenAI is in the lead, Microsoft probably seems like
probably all right
way to
exposure.
go.
Yeah. I don't want exposure to their terrible laptops.
Yeah. But you know, there's probably like a basket. There's probably some ETF that's like a basket of AI stocks, or there's some index for AI stocks. If you are sophisticated, there's probably some, like I just saw on the screen before with producer Lincoln. There was, you can buy shares in an Anthropic or some of these companies in secondary. There's some employees that want to sell, or there's some early investors that want to sell, and there's certain websites that you can buy private shares, and you just need to be a sophisticated investor, meaning you need to either have, it's different in every country, but usually it's like
Australia's
either
500K income.
No, it's 200K income or 250, or you have $2 million in assets.
Yeah.
But so the average mid-level employee at Nvidia is worth $10.6 million now. So if you 5 years ago joined Nvidia as just like a mid-level person, you would be worth 8 figures now for taking essentially no risk. You worked at an already big company.
Got a salary.
You got a fat salary. And your stock grants. And at the mid-level, you're getting $70K a year in stock grants.
Whoa.
And so that's turned into $10.5 million US dollars over 5 years. So we've spoken about this before, but really, if you want to get rich quick with no risk, if you don't want to do the stuff that we're doing, which is like building companies and taking a lot of risks where there is a lot of pressure that you have to be in the right fucking industry, in the right product, around the right people, to even make a dime or like
Yeah.
have a portion of upside. If you just want to join something that's already working, and get paid a big salary, join a big
And I guess if you want to,
company.
because
Build up your skills enough
now
to
if you
be.
join, you're not getting those juicy grants.
No, now if you wanted big, fat, juicy stock grants, you have to be someone that's like the 1% of the 1% talent. But 5 years ago, there could be a sales manager at Nvidia that joined 5 years ago
Yeah.
that's fucking, for lack of a better word, like kind of stupid.
Yeah.
He doesn't have to be that great. He got hired at Nvidia, but at that point, Nvidia has a couple thousand people. So you don't have to be someone like amazing. You join the company. Remember, you're a middle-level guy
Yeah.
or gal, and 5 years go by, and you're fucking worth 10 milli. So yeah, I don't know what companies I would join to get that right now. Maybe we can make a little list.
Yeah, we could do a little list. There's a good I'll find the resource. We'll put it in the notes. But there's a good list of basically if you're in Australia, there's a good list of like every Australian startup, how much they've raised, what valuation they're at, and that would be a good metric to look at. Of like, if they're too big, you're not going to get those really juicy opportunities. But if they're small enough, obviously there's some risk that they don't, they can't execute. They can't
I think you
scale,
should go for the
whatever.
companies that are like worth. They should be at least $1 billion. And you should always look at their potential upside. Like with Nvidia, as soon as the AI craze started popping off, maybe let's say like when ChatGPT was commercially available, so a few years ago, the upside with Nvidia is quite literally trillions of dollars.
Yeah.
So if the company was worth $250 billion or $500 billion, and it can go to a couple of trillion or whatever. Actually, 5 years ago, Nvidia was worth way less, but like 50 billion. But like, yeah, your upside is there's a lot of upside there. It's the same thing as, if you joined Canva at like,
Yeah.
if it's worth like $300 million, and then you thought that the upside, it's not going to be trillions of dollars like Nvidia, but the upside is maybe $20 billion or $40 billion. The last thing I wanted to touch on today, just a quick shout out to, do you know who Brad Gerstner is? He's like a investment manager. He runs Altimeter, which is like some fund. I just wanted to put in people's earballs that he turned, their earballs, that he turned $2.5 million into, I think, about $200 million by investing 50% of his entire like net worth or his entire fund into Booking.com.
Wow.
So it was like, oh wait, this is a cool story that I thought I'd highlight. So during the global financial crisis, he was raising a fund, and he ended up raising $5 million. And this was during a time when people didn't want to give him money because obviously the GFC just happened. But whenever extremes happen, those are the best time to take advantage of the market. That's where people will make a lot of money, because if the extreme happens where everything is severely discounted and you buy up, you've just made your life easier by over the next 5 years, you should outperform.
Warren Buffett says if there's blood on the streets, it's time to invest.
Yeah. And in the opposite, if you're maybe a hedge fund and you want to raise money and short everything while it's at the top, that's probably the equal to that. But anyway, so GFC happened. Brad ended up investing $2.5 million, so 50% of the fund, into Booking.com at $55 a share. And I think he still has all the shares, or he might have sold it, but here and there. But Booking.com went from $55 to $3,500 a share. So yeah, $2.5 million into,
well done, Brad,
into almost 200 million. And now today he runs $20 billion fund.
Wow.
So from 2008 to 2024, from $5 million assets under management to $20 billion. That's like the billionaire cool, or I don't know if he's a billionaire, but like that is like the shout out of the week of a cool story of someone that, if you want to learn more about him, he has a podcast with Bill Gurley, which is another, Bill Gurley's like a fucking goat in the sort of VC world. Famously early investor in Uber /
who wasn't?
Yeah. But like, you know, he was really involved. Like he was on the board, and
Yeah.
there was like this big feud between him and Travis and blah, blah, blah. Anyway,
Thanks for listening.
thank you for listening. That's it for this week. And we'll have some guest episodes actually happening next week. Bye-bye. See
Bye-bye.
you.